86%. In a world defined by massive data and complex algorithms, this single number often goes unnoticed. It is a statistic buried in a mountain of paperwork, a digital whisper lost in the roar of the stock market. But for a company that has just taken the technology world by storm, this number is a heart rate. It is a pulse. It is a warning. Imagine a screen as dark as the deepest reaches of space. There is no sound, no music, just the cold, silent glow of those digits. 86%. No context is given at first, just the weight of that number hanging in the air like a heavy fog. It is the weight of an entire kingdom resting on a single pillar. It is the beginning of the story of a revolution that was born in a Silicon Valley lab and exploded into a $95 billion empire almost overnight. But as we are about to see, every empire has a foundation, and some foundations are built on shifting sands. To understand how we got here, you have to look at the hardware. Picture a standard computer chip, the kind produced by the market giant NVIDIA. The famous H100 graphics processing unit is a marvel of engineering, but it is small, roughly the size of a large postage stamp. It is a tiny square of silicon packed with billions of transistors. Now, imagine placing that tiny chip on a table and setting a massive dinner plate made of pure, shimmering silicon right next to it. This is not a prop or a toy. This is the Cerebras wafer-scale Engine 3. It is a monster of a machine. While every other company in the world is trying to figure out how to connect thousands of small chips together using miles of copper wire, Cerebras did something that most engineers thought was impossible. They decided to stop cutting the silicon. In a traditional semiconductor factory, a large circular wafer of silicon is etched with patterns and then sliced into hundreds of individual chips. This process is necessary because larger pieces of silicon are prone to tiny defects. If one spot is bad, you throw away that small chip but save the rest. Cerebras ignored that logic. They kept the entire wafer intact, creating one single, massive superchip the size of a tablet computer. This single slab of silicon contains 4 trillion transistors and 900,000 individual AI cores. It is a technological masterpiece that looks like something pulled from the bridge of a starship. It is the largest chip ever built, and it has turned the entire industry upside down. The transition from a quiet hardware startup to a global powerhouse happened with the speed of a lightning strike. When Cerebras announced its initial public offering, or IPO, the financial world experienced a moment of pure, unadulterated euphoria. Investors were looking for anything that could challenge the absolute monopoly held by NVIDIA, and here was a company offering something radically different. Within hours, the valuation of the company skyrocketed to $95 billion. It was a corporate miracle. The underdog was no longer just a challenger. It was a titan. Analysts on Wall Street began calling it the NVIDIA killer. The hype was not just loud, it was deafening. The brilliance of the wafer-scale Engine 3, or WSE3, lies in its simplicity. Think about how a standard AI supercomputer works. You have thousands of small chips trying to talk to each other. Information has to travel out of one chip, through a wire, into a switch, and then into another chip. This creates a massive bottleneck. It is like a city where every single house is separated by a toll booth and a one-lane bridge. Cerebras turned that city into one giant open floor plan. Because the entire processor is on a single piece of silicon, the data moves at incredible speeds without ever leaving the chip. This eliminates the need for complex networking and massive cooling systems. It allows for artificial intelligence inference workloads to be processed at speeds that make traditional hardware look like a relic of the past. The validation for this technology came quickly and from the highest levels of the industry. The names associated with Cerebras began to read like a who is who of the digital age. Strategic partnerships were formed, and massive interest began to pour in from industry leaders like OpenAI and Amazon Web Services, also known as AWS. These giants were desperate for a viable alternative to the status quo, and Cerebras seemed to be the answer to their prayers. The narrative was perfect. It was the story of a small, brilliant team of engineers who had outthought the biggest company in the world. They had solved the interconnect problem. They had built the biggest chip in history, and they were ready to power the next generation of human intelligence. But as the euphoria reached its peak, a few curious minds began to look past the shiny silicon and the impressive benchmarks. They turned their attention away from the engineering labs and toward the dry, legal language of the company's SEC-S1 filing documents. These are the papers a company must file before it goes public, and they are often where the most uncomfortable truths are hidden. Deep within the hundreds of pages of financial disclosures, a startling contradiction began to emerge. The technological triumph was real, but the business model was anchored to something unexpected. This leads us to a central, structural question that is currently haunting the halls of global finance. The technology is undeniably revolutionary, a true leap forward in human capability. But does the hidden risk buried in those financial documents completely destroy the investment thesis? Is it possible for a company to be a technical genius and a financial catastrophe at the same time? As analysts began to dig deeper, the excitement started to mix with a cold sense of dread. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. The more the researchers looked at the data, the more a specific pattern emerged. They realized that the $95 billion valuation was not supported by a wide net of global customers. Instead, it was propped up by a very narrow, very specific stream of capital. The slow zoom in on the financial spreadsheets revealed a tense reality. Nearly the entire financial foundation of this hypergrowth, the very money that allowed Cerebras to claim its throne, originates from a single unexpected geopolitical hotspot on the other side of the world. The miracle of the dinner plate chip was suddenly shadowed by a map of the Middle East. The mystery of the 86% is solved when you peel back the layers of the corporate filing. It reveals a startling truth that the massive influx of cash fueling this rise is not coming from a diverse network of global tech giants or a wide array of innovative startups. Instead, the overwhelming majority of the company's revenue relies entirely on just two clients. These are not just any customers. They are entities deeply woven into the fabric of a single foreign power. The primary buyer is a company known as Group 42, a massive artificial intelligence firm based in the United Arab Emirates. Alongside them are various entities closely tied to the state-backed wealth funds of Abu Dhabi. This is what financial analysts call extreme customer concentration risk. And in the world of high-stakes technology, it is the corporate equivalent of walking a tightrope during a hurricane. This connection to the United Arab Emirates creates a complex geopolitical minefield. The region is currently a central theater in the global competition for technological supremacy between the United States and China. Group 42, also known as G42, has positioned itself as a bridge between the East and the West, but that position has invited intense scrutiny. The United States government, particularly the Committee on Foreign Investment in the United States, or CFI-US, views these relationships with a mixture of caution and concern. They are focused on data sovereignty and the fear that cutting-edge American hardware could be used to benefit geopolitical rivals. For Cerebras, this means their entire business model is subject to the whims of regulators in Washington. One single change in export control laws, one new executive order, or one diplomatic shift could freeze their shipments overnight. The $95 billion empire is effectively at the mercy of a government signature. There is a growing tension between the technical promise of the dinner plate-sized chip and the reality of who is paying for it. While the world celebrates the engineering feat of the wafer-scale Engine 3, the shadow of the Middle East looms large over the balance sheets. The question for any investor becomes whether this is a sustainable foundation or a temporary windfall. If the relationship with Group 42 were to sour, or if the United States government decided to block further sales to the region, Cerebras would lose nearly its entire revenue stream in an instant. This creates a precarious situation where the company must navigate the delicate interests of its primary financiers in Abu Dhabi while remaining in the good graces of national security officials in the United States. Many look to Western tech giants as the potential saviors who could offset this risk. Names like Amazon Web Services and OpenAI are frequently mentioned in the same breath as Cerebras, sparking hope that domestic demand will soon replace the need for foreign state-backed funding. However, when you look past the headlines and the strategic partnership announcements, the actual revenue contributed by these Western firms is a mere fraction of the total. While there is undeniable interest and deep technical collaboration, the massive multi-billion-dollar checks are not yet coming from Silicon Valley. They are coming from the desert. This creates a disconnect between the public narrative of a global AI leader and the private reality of a company heavily dependent on a single geographic hotspot. This leads us to the illusion of the backlog. In its financial statements, Cerebras points to a massive backlog of orders, suggesting a long and prosperous road ahead. But a backlog is not the same as cash in the bank. In the semiconductor industry, backlogs can be composed of non-binding commitments or letters of intent that do not carry the weight of a legal contract. It is a mathematical contradiction where the perceived future value of the company is built on promises that could evaporate if the economic or political climate shifts. The financial foundation is built on what might happen rather than what has already been realized. Analysts are left to wonder if these commitments are a solid pipeline of growth or a house of cards waiting for a light breeze. Is Cerebras the ultimate graphics processing unit alternative to ride the artificial intelligence wave? Or a geopolitical ticking time bomb destined to become the next WeWork? The answer lies in one hidden number. It is a number that tracks the specific compliance thresholds being monitored by United States regulators right now. As the company pushes forward with its expansion, every shipment of the wafer-scale Engine 3 is tracked and analyzed. The government is not just looking at where the chips are going, but who has access to the data they process. This level of oversight is unprecedented for a private company, and it adds a layer of operational friction that its competitors, like NVIDIA, have already spent decades learning to manage. The re-entry into the market after the initial public offering excitement has forced a new level of scrutiny on the specific metrics of compliance. Every quarter, the company must prove that it is not violating the complex web of export controls designed to keep American technology out of the wrong hands. This is a high-energy environment where the legal department is just as important as the engineering team. The risk is not just about losing a customer, but about facing severe federal penalties that could bankrupt the company. This regulatory pressure is a constant weight on the valuation, creating a ceiling that the company struggles to break through despite its technological brilliance. As we look at the broader market, the valuation metrics for Cerebras begin to look increasingly detached from traditional financial psychology. When analysts compare the revenue multiples of Cerebras to other semiconductor firms, the numbers are staggering. Most companies in this space are valued based on their ability to generate consistent profit from a wide range of global clients. Cerebras, however, is being valued as if it has already conquered the world, despite its heavy reliance on a single region. This detachment has alarmed seasoned investors who remember the bubbles of the past. They see a revenue multiple that is so high, it requires a perfect execution of a nearly impossible strategy. One mistake, One regulatory delay or one diplomatic fallout could send the valuation crashing back to earth. The market is currently betting on a miracle, and as we transition to the final analysis of their market capitalization, the numbers suggest that the true test of this $95 billion titan is only just beginning. The market capitalization of $95 billion is far more than just a flashing number on a financial trading screen. It is a bold and perhaps terrifying declaration of faith in a future that has not yet arrived. For Cerebras, this valuation places it in the same league as some of the most established semiconductor giants in the world, despite the company having only a fraction of their historical track record or diverse client base. The conflict at the very heart of this valuation lies in the agonizing tension between pure technological potential and the cold, hard reality of revenue concentration. Can a company that relies on just two primary entities in a single geographic region for 86% of its income truly sustain a hypergrowth premium? This is the central question that keeps analysts awake at night and drives the intense volatility of the stock price as the public markets begin to digest the reality of the situation. The proponents of Cerebras, known as the bulls, look past the financial statements and point directly at the silicon. They see the wafer-scale Engine 3 and recognize it as a masterpiece of modern human engineering. In their eyes, the dinner plate-sized chip is the only credible threat to the global monopoly currently held by NVIDIA. They argue that as artificial intelligence models become increasingly complex and data-hungry, the traditional method of stitching together thousands of smaller graphics processing units will reach a physical breaking point. The interconnect bottlenecks and the massive energy waste that plague standard data centers simply do not exist within the unified architecture of Cerebras. For these optimistic investors, the heavy reliance on the United Arab Emirates is merely a strategic launchpad. It is a necessary infusion of massive capital that allows the company to build its own artificial intelligence cloud infrastructure while the rest of the world is still waiting in line for back-ordered hardware. They envision a world where every major research laboratory, every sovereign government, and every massive corporation will eventually beg for this hardware to process inference workloads at speeds that were previously thought to be impossible. To the bull, the geopolitical risk is a small price to pay for a front-row seat to the next industrial revolution. However, across the aisle, the bear case is built on a foundation of deep skepticism and geopolitical caution. To these critics, the $95 billion valuation is a house of cards built on a foundation of shifting sand. They argue that no matter how fast the chip processes data, it is ultimately a physical object that must be manufactured, shipped, and regulated across international borders. They point to the extreme customer concentration not as a strength, but as a terminal flaw that could lead to a sudden and total collapse. If the state-backed wealth funds of Abu Dhabi or the leadership at Group 42 decide to pivot their national strategy, or if they face their own internal economic downturn, Cerebras has no safety net. The absolute reliance on foreign state-backed budgets creates a vulnerability that cannot be ignored by anyone who values long-term stability. These skeptics see a future where the United States government, driven by urgent national security concerns, imposes even stricter export controls that could halt operations in an instant. They envision a scenario where thousands of these revolutionary dinner plate-sized chips sit idle in a warehouse, unable to be delivered to their primary buyers, while the company's cash reserves evaporate. To the bear, Cerebras is not the next NVIDIA, but rather a cautionary tale about the extreme dangers of mixing high-stakes technology with the unpredictable nature of global politics. As we move deeper into this analysis, a slower and more reflective truth begins to emerge from the chaos of the ticker tape. The truly intelligent investor perceives that the product being sold here is no longer just the silicon wafer, the sophisticated cooling system, or the proprietary software. The real product is the geopolitical narrative itself. Cerebras has become a physical manifestation of the global struggle for digital sovereignty. It is a vessel for the massive ambitions of the Middle East and a high-stakes tool for the strategic interests of the West. When you buy into this company, you are not just investing in a brilliant engineering team in Silicon Valley. You are placing a massive bet on the continued stability of international relations and the fragile cooperation between Washington and Abu Dhabi. The hardware is merely the medium through which these global powers are communicating their technological dominance. If you want to stay ahead of these complex shifts in the artificial intelligence landscape and understand the forces moving the market, you should subscribe to this channel. We are dedicated to connecting the dots across the entire infrastructure story, exposing the hidden realities and the systemic risks that are often buried deep within the fine print of the technology market. The dramatic climax of the Cerebras story is not found in the clean rooms of Silicon Valley, where engineers are pushing the limits of physics. It is found in the hushed, wood-paneled boardrooms of Washington, where regulators hold the ultimate power of life and death over the company's balance sheet. The technological breakthrough of the wafer-scale Engine 3 is undeniable, but it is now on a head-on collision course with systemic financial and political vulnerabilities that are beyond the control of any engineer. We are witnessing a historic moment where the brilliance of the machine is being tested by the messy complexity of the human world. The final resolution of this saga will likely be decided by a simple signature on a regulatory document rather than a new performance benchmark in a computing lab. While the engineers have successfully solved the problem of the interconnect bottleneck within the chip, they cannot solve the problem of the geopolitical bottleneck. The fate of this $95 billion titan rests in the hands of the Committee on Foreign Investment in the United States and the officials who manage the delicate balance of national security. In the end, we learn that the ultimate fate of artificial intelligence infrastructure is not a matter of software or hardware alone. It is a matter of institutional trust. In the relentless race to build the ultimate artificial mind, the greatest vulnerability is not a flaw in the silicon, it is the fragility of human trust.